The growing hatred for YouTube finance influencers has risen to the peak right now. And we're going to go over firsthand, coming from a financial influencer himself that has never taken a brand deal, sponsors, and never sold a course. We're going to look into the viral video, The Growing Hatred for Financial Influencers. I'm going to give you my take and a deep dive into this. So this video is The Growing Hatred for Financial Influencers from Donna, and we're going to go through it and I'm going to give you my take with a lot of valuable information.
From a broke college dropout to a multi-millionaire, today I'm going to share
Jeremy financial
story
education
with you.
Lately, I've noticed my perception of finance YouTubers slowly shifting from educational resource to scammy salesmen.
Here's the thing, financial influencers have pretty much from the beginning, from the Ty Lopez time, been scammy, unfortunately, because there is a lot of money in this niche. And a lot of times these financial influencers say Jeremy education. Now I've actually seen some of his videos way back in the day. I've spoke to him before, and this was before he had blown up. Now the thing with Jeremy financial education is he makes most of his money from his private stock courses and his private groups. And unfortunately, a lot of people have bought stocks when he's in a sense recommended them and have lost a lot of money. Now, it is very hard to be a financial influencer because you have to speak with the audience in a relative time, obviously, if you're talking about a stock, and you have to be the market first a lot of times, or you won't get views, and you have to be kind of catchy. So Jeremy was one that had started off with covering stocks like GoPro, and these stocks pretty much went almost bankrupt. And for years, he would keep covering the same stock over and over. And this stock did not do very well. And it kind of got him a bad rep. A lot of people forgot about this. And he lost a lot of money during this. Now, his original content was, something that was filling a niche. A lot of YouTube had not really at the time been covering that type of thing. But as time went on, sponsorships came in, YouTube ad revenue, came in. And we're going to talk about why these type of things, the YouTube ad revenue really distorts these people and why they've got private jets now, Ferraris, and they're making videos on that and they're getting no views. We're going to go over that.
And I'm not the only one that thinks this.
Financial YouTubers are a cancer. Time and time again, they keep getting away with shilling terrible advice to their massive viewer base, and there's never any accountability.
There's a growing sentiment from their followers online that feel the exact same way. But it wasn't always like this. Once trusted sources of financial wisdom are now slowly being perceived as greedy grifters.
So before we dive into the rest, there's a lot to say about this because on YouTube, there's a lot of competition now. There are corporations that are putting as much money as pretty much the biggest financial YouTubers have put into their entire channel. They're doing that per day on productions a lot of times. This really is the future YouTube. It's the number one website, Google, who owns YouTube. It's like the number two website, I think, YouTube in the entire world. It's just, so there's so much competition. And if you make genuine content that isn't about what people want to watch, obviously, or doesn't have some sort of scandal or entertainment value, it's probably not going to be found. And that's unfortunate because there is so much content out there. There is AI content, there is fake reuse, repurposed content. There are billions and billions of videos of the same type of, niche or topic, a lot of times being put out per month, probably, especially with the shorts. So you have to stand out in some way. And unfortunately, these YouTubers, these financial influencers have really fell into that. And they've made tons of money. We're talking meetkevin was making $3 million per month during the 2020 run just on YouTube ads and sponsorships and his courses. $3 million a month. And this is huge. Like, this is something
Hey guys, it's Donna. This video was requested by one of you.
And this is something that you probably won't ever see again. It was a phenomenon. They're not making $3 million a month, but they're still making a ton. And it's from new people who jump into the system and say, oh, I want to buy their course. meetkevin literally has a course lifetime membership for $20,000 per person. And he's got tens of thousands of people in this.
Genre. So specifically, we're going to be talking about the educational sector. Your Graham Steffens, Andre Jeeks, meetkevins. These YouTube.
The funny thing, I think Andre Jeek was literally like he had nothing to do with finance pre the 2020 run. It was pretty much, I think he'd seen Graham Stephan videos and I think he was like a magician, which is kind of funny. And Kevin was a real estate, same thing with Graham Stephan, both real estate. So nothing to do with stocks for the most part.
YouTubers have given practical advice for the everyday person. What's an IRA? What's an index fund? In terms of finance, the educational influencer was, I think, considered one of the most trusted as opposed to someone like Tai Lopez. But people are starting to distrust them as well. A few weeks ago, that was made even more clear in a video by CoffeeZilla. The peak of this distrust has been prompted by a video from CoffeeZilla called YouTuber Bank Won't Let Me Withdraw Money.
They were talking about a bank promoted by YouTubers that's now become a casino and users can't get their money out.
In short, YouTubers such as Graham Stephan, Nate O'Brien, and Andre Jeek promoted a product that has put many of their followers in financial.
And this is the biggest issue here, is these YouTubers, they are sent emails daily. I'm a small finance YouTube channel on my other channel, and I've got hundreds and hundreds of emails from companies, stocks, and I've never taken one sponsorship deal. And the main reason was I don't know what these companies are, and I really, most of the time, I don't use them. If I use a product that on a daily basis, I might talk about it, but I'm not doing sponsored deals. I'm not going to talk about a specific stock, and they pay lots of money. I'll literally show you, here's my email. Here is some emails. I've since deleted a bunch, but this is just in the last couple months. I cleared out all my email because like I said, I don't respond to those. This person keeps sending me multiple interview opportunities from different, whether it's all in finance, by the way, this is from the finance channel. And you see like all of these emails specifically from companies that want to pay. Now I know YouTube channels in the finance sector, they get 1,000 views or less, and they are making sometimes $500,000 a year, sometimes more, just because they are pushing this stuff out there. And it's really weird because like a lot of the viewers are probably also bots and fake views that they run these, these in a sense, marketing campaigns. Sometimes I've seen them say that they'll pay 20 grand for like 5 videos if you do an interview with the CEO. And it's really to pump the stock or pump, customers into this. And the finance niche is so big because a lot of the people usually trust the influencers that have made a name for themselves, so that you get all these emails. And it's really crazy the amount of scams and amount of money in that. And I've never taken that. And that's why my channel really hasn't grown. I don't, take these sponsorship deals. I don't just make videos on that channel about every day trending stocks. It's all usually value stocks that I think, have a potential, like Meta. When it was $88, it's now almost $600. I made a video, on GameStop when it was under $1, like uranium stocks, these type of things. They didn't get much views, but the stocks are up thousands of %. And you're not always right. You got to give these guys a little bit of a break. If they're talking about something, say they're passionate about, things are going to happen. These banks, it's not like, it might look legit and it's not always going to be legit, unfortunately. But they do have to be held accountable.
Ruin. This product was Yada Bank, a banking service that seems to have turned into a casino, and now viewers can't withdraw their money.
That's crazy.
On Reddit calling Graham a snake oil salesman that got them screwed. To be fair to Graham and all the other YouTubers that promoted this bank, including Markiplier, it's not completely their fault.
See, Markiplier, I mean, this is a guy that's not even in finance. Obviously, that shows you that there's so much money. FTX, I think, was another one. You have got hundreds of thousands and maybe even tens of millions going out to some of the top big influencers. I think meetkevin was paid sometimes 100 grand for a sponsorship deal at times. And FTX, I think he had given back like 100 and something grand of the FTX stuff to victims. But it's still ridiculous just for promoting something that you don't probably even use. Now, it's different if it was something that you literally use every day and you really believe in. The audience can see that and they probably don't mind. But when it's something that you put your life savings in, which is the dumbest thing to do, and you don't even know what this is, it's not really FDIC insured, obviously, because people lost all their money. And it's really sad.
There'd be no way for any influencer to foresee this disaster. In
There
short,
would.
the reason users...
I mean, in a sense, there would. You got to do your due diligence. This finance influencer got emails from these companies and did not take it because I said, why would I do this? If I'm going to do a deal, if Charles Schwab, JP Morgan, these big companies, if they contacted me and say, hey, we want to sponsor, then I'm like, what is the risk? I got to mitigate the risk. What's the risk? There's little risk in a company like that with trillions of dollars in assets to go bankrupt. Now, there was an '08 crisis, so it always could happen. That's the risk you take. But a bank called Yada that looks like it was literally created overnight doesn't sound, and they could have done more due diligence on that. They really could. So you can't really give them the break, in my opinion. Now, there's other products you don't know. I mean, a stock is a crazy thing. A stock, we'll talk about that later. You know, you could be the best stock in the world with the best finances and it can still go downhill. And it could be the worst stock in the world that makes no money, is in crazy debt, and the thing goes parabolic. So that type of thing is really tricky. We'll talk about
can't
that.
withdraw their money is because of a middleman dispute between Yada's banking partners. The problem is a bit complex, so I'll link some articles that will explain this in detail if you're interested. But essentially, two intermediaries, Synapse and Evolve Bank, can't agree over transaction and balance ledgers. As a result, thousands of customers have been unable to access their funds because these companies can't
We're going to go on 1.5 speed.
agree on how much they have or don't have and who has what. Blaming an influencer for this would be like blaming Mr. Beast if his sponsor, let's say that game Brawl Stars, ever glitches out. It's Brawl Stars' fault if their game glitches, not his. Yet one peek at Graham Stephan's comment section today, after this fiasco, shows you just how much animosity there is still towards him. On the surface, this seems like a case of a mob angry because everyone else is angry. But it's not. CoffeeZilla even acknowledges that there is no way for these YouTubers to predict this disaster. This is because this animosity has been brewing for these educational finance.
I mean, like I said, there is a way to predict. You got to mitigate the risk. If your sponsor has a potential to go bankrupt, has a potential to, especially with money and finance, then you should take on that risk and say, okay, you know what? I'm going to do my due diligence. Look into the finances. Who owns it? Do they have cash? If these guys are supposed to be finance influencers, these companies were in mega debt. They should have been looking into that. They should have looked at, okay, is it FDIC assured? Do these companies have a big, do they have free cash flow coming in? I mean, like, these are things that these finance influencers are supposed to know, but they don't because they were not finance influencers. He was a magician. He was working at a gas station and was literally, I think from the very beginning, investing a lot of other people's funds, some of his wife's, I believe his family, his wife's inheritance or something like that. That's literally what happened. He was a real estate guy, was getting 0 views on YouTube, and he started to cover topics and go over like Grant Cardone's, who was also in real estate, and expose him and do these type of things and got him views. Graham Stephan was literally, and he's the one that everyone says, okay, maybe he's more legit. But the thing is, he was a salesman in the beginning, a real estate salesman, and he got lucky like a lot of people do. This guy got lucky on Tesla, okay? And the reason why these guys have made money, like I said, they're bringing in sometimes hundreds, thousands, millions of dollars a month. When you have that money coming in, you can invest it in risky things. You can invest it in the index funds, and you can make a ton. You can invest it at Tesla in the beginning and just let it sit there, and then you look like a genius because everyone looks like a genius in a bull market, and that's unfortunately what's happened. And Graham Stephan, back to Graham, he was a real estate investor that got lucky because he bought into the real estate and he was selling things as the market was just going parabolic. Same with Kevin. And they both had help from other people. That doesn't mean that they're not successful, and they weren't, but they knew real estate, and their most viewed videos were real estate. And they were feeling a niche in the finance sector with credit cards. And I believe Graham Stephan did a video on a Tesla that he bought, and it was kind of clickbaity, say he could like basically get one for $0 a month. And in the end, he kind of did, because the video that he made on how to get this Tesla for that price, it pretty much, their ad revenue paid for the entire Tesla. So it was like a money hack, right? These people talk about finance. They don't even have to have money in the market. They don't even have to have any degrees on this, and they can talk about it because it gets clicks and views. Then they get subscribers, ad revenue. And then the biggest thing is stock courses and memberships to these stock courses. And Kevin, this one, he literally has a stock course that's $20,000 a month, or $20,000 for a lifetime membership. And he has some that's thousands and thousands of dollars a month. So, I mean, when you have that type of money coming in, anybody can make money in the market. You could throw it at anything, really. That's a legit stock, especially in a bull market, and make money. And that's what happened 2020. Everyone was at home. People were looking to use their stimulus money, and all of these guys banked on it. You got a magician, you got a gas station worker, you got 2 real estate guys that literally just started making content, got all these people to give them money. And once you get to that level, you're pretty much on autopilot. And, people, a lot of smart people, I know a lot of smart people that are very rich too, bought into this. I know particular people that used to watch them, and now they're like, nah, these guys don't know what they're talking about.
Influencers for years.
Am I about to clap some millennial money cheeks? Except for Graham, the only intelligent person on this panel.
This guy's funny. He's actually a veteran like me. We're both veterans, and he was in the Army. He's kind of a funny guy, but he kind of takes it too negative. He puts on too much of this persona, and he's probably not that way too much in real life. He's obviously acting out and trying to get the clickbait stuff. And he's talking about finance too. And he's the type of guy that, is in a sense probably annoyed that these guys, I like that he has his shirt off, it's funny, that these guys are making so much money, right? They don't know what they're talking about. He's like a CFA, he does people's taxes, I believe. And he's probably so mad. And I've been mad before. I'm like, are you kidding me? I was covering a specific stock back in the day that I really believed in. And I made multiple videos on it. It wasn't just, hey, I never got paid to talk about that stock. And, eventually the stock goes up. But, the same guys in the finance sector was promoting hundreds of different stocks. And then they act like in the end that they get all the credit. They're like, oh yeah, and remember once I told you about that stock? Look at it now. And, they show all their money in their portfolio, and it's like, yeah, but that $2.5 million that you're showing on the screen was literally from ad revenue. It was because you weren't worried. You didn't have any risk because you're bringing in $100,000 a month. So you can literally these guys lost millions of dollars too. meetkevin, I think, lost 22 million in 2022. And that's just the unfortunate part of the game. That's what happens in this, especially when you are only wanting to invest or talk about the trending stock. And there's usually not as much value. You're usually going to buy at the peak like a lot of these guys did. And that's why they're getting the hate. Even with this bull market in the market the last year in stocks and in finance, rates are starting to come down. These guys aren't doing too well.
Of bozos.
You have people who claim they no longer watch them. Others accuse them of being scammers. Meet Kevin's entire subreddit has completely turned on him.
Yeah, that's crazy.
What's interesting about this phenomenon is that the criticism isn't just towards one guy. It's towards almost all educational influencers across the board. Gonna call them that for the rest of the video. It's shorter and makes things easier. So why is everyone turned on them? I can answer that question for you in 2 words. Greed and the algorithm. That's technically 4 words, but I never know if people count the and the whenever they use that phrase.
I mean, yes, it's greed and the algorithm, like we were talking about earlier. The YouTube will promote their stuff because it is usually the highest CPM, one of the highest. Educational and finance is usually the highest CPM. And these guys get lots of views. Now, their channels have not been doing as well the past couple years, even with this bull market, you would think. And it's because I think people are starting to see a lot of these players, you've got Graham Stephan. He's got a sports car as the background. He's never really changed it. And it's like, he's always in his, his house, his mansion. I think it's his background is literally his car. Then you got financial education. Their channels aren't doing as good. You go to Financial Education's channel. One of his latest videos, look at this. My first Ferrari. So, I mean, it only got 19,000 views. And it's like, people don't care about that stuff. Now, if his channel was dedicated to, hey, we flip supercars and we do it for free, we use the profits, that's interesting. That would be interesting. But a guy that literally has had, his channel just based on just talking literally about whatever's trending. 7 stocks I bought today, Palantir stock is about to explanation point. 3 high potential stocks to turn 1,000 into 1 million. It's like, come on, this type of stuff this type of stuff, people will click on it. And it's unfortunate that a lot of people will buy into when the stock is at its peak. And that's the unfortunate part when you have a finance channel. You have to keep that machine going, okay? That's literally a machine. You got to keep putting out content for that algorithm, and it blesses them. Like, these guys are still getting views. Yes, they're not getting as many views, but I mean, it's potential that he's making way more than $5,000 a month. His views are way down than what they used to be, but you know, over a 3-month period, 20 grand in ad revenue, and then sponsored deals. Almost all of these videos that these guys do are always sponsored. They have affiliate links. That's another big thing. And the biggest, he's probably, I bet you, because I've seen Jeremy's group. He always talks about his stock group. He's got thousands of people in this that pay him per month. And you know, they literally are probably giving him close to $50,000 a month. So you got this. These guys are making hundreds and hundreds of thousands. This is just YouTube. We're not even talking about other mediums. And they sell stock courses where they make pretty much unlimited revenue for the rest of their lives, right? It's residuals coming in always. So these guys don't have to worry if they're buying the stock at the peak, which buying bankrupt stocks, this happens. He bought Tattooed Chef literally and kept buying it, and the thing like went bankrupt. There's lots and lots of stocks that these guys do. And that's the unfortunate part, is he probably really didn't even believe in the stock in the initial run, but he kept covering it because it was getting views. It was what people were talking about. And there's numerous other stocks. And as a finance influencer, this is, you know, you're pushing the algorithm, like she's probably about to say.
Let's go back to 2015, where social media was filled with these scammy salesmen who illustrated themselves as financial gurus.
Here in my garage, just bought
Is he still around?
Here.
They showcased their fancy cars as they gave advice to their audience. They talked about how they got rich with a spectacular view behind them. This influencer showcased beautiful women, interviewed high-profile celebrities, and seemed to live a life of luxury. The problem with these types of videos were they were always selling something, the promise of their lifestyle.
Yeah. I remember
for a low payment of $1,000 and your soul, you too could become a millionaire if you buy my course. It was so salesy and inauthentic, almost everyone and their grandma knew these videos were essentially ads.
Kind of obscene how every detail of this video is so purposeful. The Lamborghini, the garage,
Yeah, I mean, the thing was, back in 2015, YouTube, you know, I've been around in YouTube, by the way, guys, since 2006 when I created this channel. Then this is what I'm starting to do. You know, I've created so many videos and tried different niches, but this is something that I really do like. I really do like covering, you know, things here in a commentary manner, making documentaries. And this, in 2015, YouTube was a crazy place because Tai Lopez was putting so much money into these ads, and he hacked the algorithm, and he was everywhere. He was, especially Instagram too. He was all over Instagram, became a meme. And this guy, no one really knows, like, where was he even getting his money? Did he even have this? Pretty much, I think everything was rented.
Shelf. And you want your money so bad, dude. He's thought about this video a lot.
However, by 2016/2017, you had new voices coming into the finance genre, education. They were teaching viewers all about credit, what the hell dividends are, an ETF versus a mutual fund, and all about the stock market. Some of these YouTubers, such as meetkevin, even did deep dives on...
This video I have in my documentary, if you want to watch, about meetkevin that I went over. It's my previous video. But this video is Kevin making a scene pretending that Grant Cardone beat him up, and he basically said he would never create a course, a stock investing course or a real estate course ever, because these Grant Cardones, these guys were charging, I think Grant Cardone charges like $10,000 for a meeting with them and stuff, like at these events and everything, even more. I think it's like 20,000 for certain things. But he was making fun of Grant Cardone and using his clickbait stuff, made this, and eventually he's like, I'm gonna do a course for 200 because I think they're selling it for too much. And then now meetkevin does a course for $20,000. So you can't make this stuff up. Like, these guys, and people talk about it. We're talking about it right now, but this is where things have
Some of the
came
scammy
from.
salesmen that dominated early YouTube, getting sued by Grant Cardone. These guys were actually carving out their own section.
He was sued, but it was dismissed. And the suing really was to scare Kevin to just lay off, because Kevin was making videos that were getting, back then, which was a lot, especially for his channel, 500,000 views, you know, hundreds of thousands of views, especially because Grant Cardone took the bait. And that was one of the things. He took the bait and he started to ride on the biggest, someone who has, I think, $500 million in real estate. Kevin started to ride his coattail. And that's kind of what gave Kevin that momentum.
YouTube, where viewers saw them as a separate entity from the scammy salesmen. They were educational.
And there's the other thing. These guys, He's using a GoPro, by the way. This is funny. This is when I remember I would talk to him at certain points. I think this was 2016. And I would comment sometimes on this stuff and be like, you know, dude, like GoPro is not good. It's not a good stock. It's a good product, but the companies ran poorly. And he pretty much wrote it on until the stock was basically a zero. He lost a lot. But that happens. That happens in stocks. But this huge wide angle lens, it was always funny. It's like, zoom in a little, bro. Zoom in. But yeah, let's go.
Trustworthy and informative.
And I'm here to provide free, easy to understand financial education.
Free.
Dare I say, millennial Dave Ramsey or Susie Orman? This era in finance YouTube was, I mean, honestly, kind of life-changing for me. My parents are immigrants, so their financial advice to me was just save money, credit cards are bad.
It really wasn't that like groundbreaking. It wasn't something that, in my opinion, like I said, I'd seen it too. It wasn't something groundbreaking. It was stuff that literally was just regurgitated out of books, and it was just put in a normal format where a guy in his room was just talking, right? So this stuff was out there. It wasn't something new. It wasn't anything new. And this stuff should just be basics. Unfortunately, their audience is usually in America, and you don't have this stuff taught in school in America. A lot of other countries, you are taught these things, and it's just basic common sense. But in America, it's definitely not common sense.
And school teaches you nothing, by the way. Or maybe they did, just wasn't paying attention. But part of the reason why I opened up a Roth IRA was because of Graham Stephan's videos. I was so annoyed by all the Ty Lopez's promising this unattainable dream, but these finfluencers were like a breath of fresh air. They actually gave me something practical to use for free that I could do that day. But there's a problem with sensible education content in finance. You can only do so much of it. Unlike Mr. Beast's.
No, I mean, you can do a lot. And Meet Kevin has more videos posted, okay, than literally the entire career of PewDiePie. So, I mean, yeah, like financial education, he's done half of that, 2.6 million. Graham Stephan's the one that has done the least, but someone like Meet Kevin's got like 5,000 videos. Yeah, 5,000. And then look, like he makes these videos about, you know, his private jet. I was going to talk about this, but this was 2 weeks ago, 15,000 views. Like nobody cares. Like, I don't understand like why he posts some of these, excuse me, like my own channel has got 15,000 views on videos about finance that was legit. And it's like, it's because he's talking about stuff that he doesn't care about in his jet. And it's like, it's just weird. Okay. These guys just fell out of reality. He's literally streaming from his private jet, thinking people like it, but it just makes them disconnect from him even more. He doesn't seem like that real estate dude. The same with Jimmy, Mr. Beast. He does these elaborate things. He, you know, started out in his room doing things that like really connected with people. You know, he was doing IRL stuff in real life, stuff you normally would see like in the Guinness Book of World Records or, you know, Ripley's Believe It or Not, some fun stuff that I always enjoyed. And I watched Jimmy before he was like a big YouTube star, couple 100,000 views. And so it was immature, but it was like stuff that you normally would be like, whoa, you talk to your buddies. This would be cool to do, right? You know, jump into a pool with Orbeez and like this is fun stuff. And he did it. And he's now the biggest YouTuber. But he's able to do that because of the big budget. Now, these finance influencers, a lot of the stuff in finance is very dry. It's boring. You can't really mix the Mr. Beast stuff. You can try, but it comes off as unauthentic. It comes off usually as a sponsor type deal. And it's, you know, there's really no one doing it. Graham Stephan has tried. He's got 5 million followers almost, Graham Stephan, but his views has even gone down. Look, why looking poor is important. Now, Graham he's seen these videos. I guarantee he's watched this documentary on him. He's watched the CoffeeZilla stuff on him. And he's starting to see that humility, being authentic, is the way you gotta be. The reason people like someone like Keanu Reeves is because he's pretty humble. He's authentic. The reason I talked about the biggest YouTubers coming up right now that almost have 5 million, you know, followers now, it's like gaming YouTubers like Queso. This guy got 3 million followers this year already. He streams from his trailer house and he hasn't even changed his webcam. He's authentic. He's funny. People like him. But these guys, like, look poor. He should tell his own buddy why looking poor is important. And then you go to financial education, his latest videos, right? Holy smokers, my first Ferrari. Nobody cares about that. If you're a car channel, I love cars. I like cars. I flip cars. And I wouldn't want to watch this video. It's like, I don't care about your Ferrari. Now, if you're saying why you should invest in Ferrari stock, potentially, and it should never be financial advice, you should never tell anyone they should do it. You should be really investing your own money if that's something you believe in, but that's on you.
Content which thrives as long as his brain works, some genres have a natural limit on the amount of content that can be produced. I believe finance content that is sensible and educational is one of those genres. There are only so many ways one can explain the difference between a Roth IRA versus a traditional IRA.
No, I mean, there are interesting ways. There are people like when someone talks about something, really going and doing it. If you're going to talk about opening up 4 side hustles, those are big videos. They've got 5 million views, right? You should go do them yourself and literally show, hey, this side hustle worked, this one didn't. Those will definitely get your channel views, and that's more interesting. Instead of being the channel, there's finance channels like Joshua Mayo who post the same, this side hustle's good, this side hustle, and he took off, but his views have gone downhill. Now he sells a stock or a course on not only YouTube and editing. And unfortunately, these guys, it's okay to make content and then just kind of like, ride off of it a little bit. But if you want to be authentic, you want to be, interesting, and you want to really connect with people, there are ways to do it. There are. She doesn't look at it that way. It is a dry sector, but there are fun ways you can make the content better. And Kevin, when he did real estate, was doing that. Kevin was doing that in real estate, and his videos got like 4 million views back then. He was saying how you could flip a house, put 10 grand into it. He was doing it. He was literally working out of his like truck, his van.
Or which credit card is the best for beginners? Take me, for example. I think I represent one type of viewer that a lot of these educational influencers had. I'm an average person just looking for a way to optimize my current income.
She's not an average person anymore. Look at these views. And this, she's doing well. 573,000. Donna. This was her last video, by the way. And go check out her video. Links in the description once we're done with this, if you want to watch the full thing. But she's not, just an everyday person anymore.
I'm not trying to take a big risk right now, picking some stock where I can go all in and become a millionaire. I was literally just looking for how to do this.
You should never pick a stock and go all in. And, it takes time. But if you can bring in an income like this, from YouTube, and you're investing into the market in a Roth IRA, very, very smart to do. A lot smarter than trying to pick, what stock. Because you can have all these degrees and still be wrong, because it doesn't matter what the stock is doing. It really just matters, if you got to be consistent. And if in investing, if the stock could, like I said, have great financials, great technicals, everything's going good, but the stock could still fail. Doesn't mean it's going to go bankrupt, but it could go sideways for years. And unfortunately, a lot of people usually buy at the peak of a lot of stocks, like I'd said.
Basics. I got what I needed, and then I kind of stopped watching them. And that's a problem for these guys. As you should know by now, creators are paid based on how much viewership they garner from their videos, and sponsors.
But the thing is, it's not sponsors. These people, these influencers have communities that pay them per month. They make so much per courses. Meet Kevin, the courses. Let's see, Meet Kevin course. Like I said, you go to there are thousands. Go to his Discord. There are thousands of people paying this. Join for only $19,980. Join for $9,999. Like this type of thing makes them so much money. They could get 0 views, and as long as they are still selling those, which people buy into them. And this is someone we're going to talk about in a minute. This is someone who did it right, who churned $53,000. Yes, this is what he looked like a couple months ago, into 800 million. And he did it in 4 years. And he never sold a stock course. He put all his information for free, and now he has 1 million subscribers. He's probably never going to make videos, probably not like he used to, live streams on stocks, but that's someone who has multiple degrees and also has multiple classifications and qualifications in stock investing, selling stock, they can actually be a broker. And someone who you should really look into. And we'll talk about that.
Sponsorships, of course. We'll get back to that. The more views they get, the more money they make. If you have a viewer base that will eventually stop watching you after, let's say, 7 videos, that money is eventually going to be less than it was before. I see this a lot in the education space in general. People get what they need and then they leave. Take fitness, for example. The beginner just getting into gym culture will often
Yeah, I mean, the same thing. When those type of people end up making their money or they lose money, of course, they're going to leave. They're not going to stay there. But what you got to do is if you want a good community, and I've built a good community. If you want a good community and you provide valuable content, say someone like Roaring Kitty, Keith Gill. This is someone who I literally done videos about. This video, and you got to do it when people are talking about it. This got 15,000 views. This was right when it happened, and I put so much effort into it over the next couple months. And this video is 32 minutes long on the finance channel, and no one really watched it. And the thing is Keith Gill kind of just dropped off the radar again, right? Made all this money. It was like, it's just they made a movie about him, documentaries, and it doesn't get views. And it's just the name of the game. You got to feed the algorithm.
watch a fitness influencer to build their own fitness routine, and sometimes
literally when it's at its peak, and that's what these influencers usually do. They just talk about the stock that everyone's talking about. They talk about the economy that everyone's regurgitating the same thing. And unfortunately, if everyone's piling the same stock, it's probably going to go down after that. And it's almost always when these influencers talk about a small stock that it peaks and it goes down for years.
Their diet. After they perfect their form and build a routine, there really is no reason to keep watching. This is why a lot of fitness education channels have inconsistent viewership. Their channels are...
But the thing is, there's a countless number, there's billions of people in the world, and you're always going to have a new audience. That's not a bad thing. You want an audience, the same thing with any niche, any gaming niche, or PewDiePie. His audience was young kids, and now they're grown adults. They have their families of themselves. Sometimes they'll watch them, but yeah, PewDiePie has 111 million subscribers, and his live stream yesterday I've seen only got 20,000 viewers. Yet Queso, brand new this year, got 5 million subscribers. His viewers are 50 to 100,000 viewers sometimes. It's because they grow out of it. Now, PewDiePie probably could have got this next generation alpha and beta to jump into what he used to do, gaming and posting the latest game. He could have done that. He could be the number one on YouTube if he wanted to, on the trending page, number one video. Probably put the effort, but he's retired. He's done with that. He's done. But these influencers, they're not, because there is so much more money in finance than there is just in gaming.
A revolving door of new people coming in and out. In theory, this sounds okay because there will always be new viewers. In the eyes of brands, it's not so great. The influencer is unable to build a loyal community. They keep leaving.
The eyes of brands, it's fine because in my opinion, that's where she could be wrong, because when you do a sponsored deal from people that have talked about these sponsored deals, a lot of times it's how many viewers have you got? They're not looking at necessarily, are they returning viewers? Because a lot of these viewers, and they could also use the data of saying, hey, I have 50,000 paid members. These people pay me for private content or this community. That's big. That the viewers have a lot of money. So it's not going to hurt them. That's why they are sponsored. They could. That's why we get all these emails for sponsorship deals, because these companies use that money, and even if they don't make money, they write that stuff off. So there's just so much money in finance, obviously.
After everything they need, this leads to less likelihood of those new people purchasing whatever product. However, the fitness genre has been able to solve this. Lifestyle content and fitness entertainment is a growing community with consistent viewership. Viewers are watching for the creator rather than just the info. So after exhausting...
So I also was a big part of the finance influencers. I ran channels that have had millions of subscribers, helped, shoot, direct, write. Some of my friends were the biggest finance influencers, the first ones, in the space, YouTube and Instagram. And I could say that now those channels, it takes a lot, because we were editing, making stuff, coming up with ideas, trying to do the Mr. Beast effect, but that gets taxing. It gets taxing on you and your audience as well. They expect something bigger and bigger every time. But if they just want the finance stuff, and if you're real, you literally, like Sam Solik, this guy's got millions of subscribers. He doesn't even edit his videos. They're just long. That's kind of where YouTube, this trend is shifting back to. And that might be where this finance side could rejuvenate itself and be more authentic. Just going live the whole time with an audience, talking about them, showing them exactly what you do, what you believe in the markets, the stocks, whatever, kind of like Roaring Kitty used to do. Deep value, right? Roaring Kitty's approach, he would go live just like this and talk about the stocks and never sell a course, never do any of that. This live stream got millions of views, 2.6 million. And then it got him over 1 million subscribers now. So, that's one of the things that I think we could take and learn from other sectors. Yeah, finance is boring. You got to step it up a little bit. But people want education, and you're probably only going to be able to educate. Can't really entertain them too much. And people have tried it, and it is hard to do, but maybe there are ways to
In
entertain.
basic sensible topics, these finfluencers had to target an audience that would actually become a community, like in fitness entertainment. Is it even possible to do that in the genre? The person that sticks around isn't the safe investor who invests long term. Again, they've already learned basic finance from early videos. I mean, you could probably...
Like I said, with my community in finance, people are successful. I've got buddies that have made billion-dollar companies that are still a part of my community, that contribute, that, answer questions, or maybe even just joke around. A community, you don't have to be providing education 24/7 as well. Sometimes it's entertainment. Sometimes it's literally, how are you guys doing? Like with the storms, the hurricane, a lot of people in our community might have been there. So we were checking up on them. They were showing live videos or whatever of their own life. So that is a community. Graham Stephan doesn't have that. He's not going to be going in there. And these guys, that's the thing, is they get disconnected. They're in their private jets. They're in their Ferraris. And there's nothing wrong with having those things necessarily. But when you're trying to educate people on why you should basically have success by investing or, get out of debt, having a private jet and buying a Ferrari is not usually the best idea. The money for that private jet, to a lot of people, probably they think that they should have invested that into the market or the stock or your own company, your own fund that these guys have, like meetkevin. So yeah, the community, that's the one thing she doesn't really, I guess, understand, is community is more than just, hey, give me information. Sometimes it's not just education. Sometimes it's entertainment, and it's elevating people too. Sometimes it's encouragement. It doesn't even have to be finance.
Probably look at any of these guys' videos, sort by oldest, and find that everything used to be basic and educational. Today, it's all clickbait.
Yeah, I mean, if we go to like Jeremy, we look at his oldest videos. What is the checking account? What is the savings account? What is a credit card? Difference between, and then, these got no views, right? 1,000. This is a guy, like, this was 8 years ago, 1,000. And it's something that kind of takes a toll on you. Why make content if no one's going to watch it? And unfortunately, people's attention spans have changed, and it's, he'd made all these videos, a lot of videos, and then that one only has 400 views. Most expensive cities in the world to live. I mean, you would think maybe that'd be a cool video, but like, it looks boring. It's literally shot in a big wide angle lens. And I mean, it didn't have a thumbnail, a very good thumbnail. It looked lazy, right? But look, and this, I was talking about GoPro stock. He was talking about GoPro. And honestly, if he would have made a thumbnail, I bet you this would have got more views. This one got more views because what he put in there, how basically to invest as a teenager. Yeah, these guys, we're creating educational content, and then certain things started to take off. This was when finance started. Look, 75,000 views, long-term investing, 15 minutes. And the thing was, they weren't necessarily successful in their own lives. They didn't build these. This wasn't, a guy right at this point that was building companies. A lot of these finance guys, even from smaller channels, because I know this sector, they were broke. They were like living paycheck to paycheck. They were the guys that were trading the market, like Warrior Trader. He was literally living from credit card in debt because he was losing money in the market, but he was still making videos on it. So it's a tough game. It's a tough game to be an educator, entertainer, and to make relevant content that people will watch.
This is just my speculation here, but I think the person that watches a finance influencer isn't someone who's experienced. And I'm not trying to diss them. Anyone?
No, there are very experienced people. Okay, and I can show you this. So like, so we'll look here on my own. This is my Twitter, and I post finance stuff on here a lot. Followers, I've got a lot of people that do follow me that are way more qualified in a sense than me. They've been trading or investing in the market a lot longer than me, a lot older than me. Doesn't mean that they're, you know, a better person but you know, someone like, you know, like some of these people, like right here, Tom Lee follows me. He literally is probably one of the smartest people in the entire market. He's been right about a lot of things. He's got his own fund and he follows me. So, you know, he doesn't follow everyone, but he actually does follow me. So it's pretty cool that, and well, StockTwits follows me. I just noticed that. I mean, that's pretty cool. So yeah, I mean, these are, and by the way, I'm not related to this person, Becky Quick. And that is my real last name though. And there are some people that scammers and stuff that I have blocked on here. And it is just kind of funny that he follows Roaring Kitty. That's another person. That's someone who I follow. See, there's me right there. I like I said, I've been right in a lot of things. This was one of the big ones, Meta. No one cared about this. I posted this on Wall Street Bets, got like 20 likes. This was when Meta was like at $88. And this thing is like what, almost $600 now? So, and I've done the same thing recently with PayPal. Right, this is another thing. So when PayPal was in the 50s and now it's, what is it, 80, $81 right now? But you're not always gonna be right. But stand by your thesis, tell people why you think this. You know, when I posted this thesis on PayPal, it got a lot of views, you know, and I put a lot of work into it, you know, and that's something that, you know, there was a lot of people, you know, Tom Lee reposted it and the people that follow Tom Lee is like the smartest people in the world. So yes, there are people watching this and some other people that follow me. This is not to brag. This is just to literally rebuttal the thing. We like to do this, you know. Someone like me, like I said, I have people that that follow me that have created $1 billion companies. At least 3 off the top of my head that I know of and that I've talked to and that are considered friends. So just because I don't have 1 million subscribers and my community is still somewhat small, it doesn't mean that you don't have people watching them. Now, the majority of people probably are novice and new investors, but you just got to remember that. This channel, you know, YouTube is huge and you never know who's watching your videos.
One is free to share their opinions on how to invest or whatever. I just doubt that people who are experienced in the world of finance are interested in hearing the opinions from people who make their money solely using content creation or selling courses. The type of viewer that these guys are able to keep are probably beginners, but beginners with this sense of, I want more. I'm going to be rich too. For these viewers...
Well, see, the problem is the people that have the money, they're probably not watching them for the fact that they think they can make more money off of them, and they're probably supporting these guys. The problem that is these guys are kind of out of touch with reality, right? They were probably watching them for the entertainment. When Kevin goes live and talks about the Federal Reserve dropping rates, Kevin does a really good job, meetkevin, at, you know, covering it live. Okay, that's a big deal. Covering it literally live, and then the algorithm picks it up, puts it out there. He's the first person to literally be able to do it. That's why he's made 5,000 videos. He has a crazy good work ethic. But there are people, like I'm sure people even with more money or more advanced are watching them for other reasons. Not just education, but maybe entertainment, maybe to get some, you know, information. Because you can take all this, and it doesn't mean just because I watch a video on a certain stock or, you know, something does not mean I'm going to invest in it. And that's what the problem is. A lot of the subscribers probably will just take their word for it and jump into it.
It's like, okay, you taught me how to set up my Robinhood or whatever brokerage, but tell me what stock is the next Tesla so I can make a lot of money. And that is where the greed starts to kick in. Instead of giving that same level-headed advice as they've done before, many influencers started to feed into the emotional and irrational tendencies of their viewers, like producing videos on which individual stocks to buy.
Hey everyone, meetkevin here. I just came back from a run and I'm so excited to be able to share my stock portfolio with you. I'm going to show you everything
Let me tell you right now, there isn't one expert that can tell you which stock will make you $1 million. Otherwise, we'd all be listening to that expert. Unless it's Nancy Pelosi. If you happen to see her buy something, you do it.
Tick tack.
I'll tell you who. Guess who? Roaring Kitty. Roaring Kitty. He will. You watch him. This guy, forget GameStop. This guy had hundreds and hundreds of stocks that he would bought in 2020, and he's bought stocks that have done, 20 times the price that he bought it for. Had sold it, right? So 20x, 2,000%, and he's had multiple, dozens and dozens of those. He knows what he's doing. Like I said, this is a gem on YouTube. This channel. I've literally watched every single one of his live streams, videos the past 4 years. I've learned so much from him. And the way I see it is like, I've been trading the markets, since literally 2006. And when I first started, the market was a lot different back then. And I really didn't get into it until 2000, and I'd say a little bit during the financial crisis and after. And I didn't make any content on it on this YouTube channel during that time. But someone like this is someone that you normally don't see, and that's why they made movies about him. This is someone that was so smart, had so much dedication to be able to stick with the play, the thesis, and it played out. And it was something that I had seen in the market and talked about. I talked about it in messages, more posting on Twitter and stock twits. I didn't make a lot of YouTube videos on it. During the time, GameStop, I was in another sector with uranium, and those stocks did thousands of % gains, but nothing like GameStop.
So, a winner.
But
So
what's funny is, the other thing is, it's not Nancy Pelosi. She does not trade stocks. It's her husband. He's a fund manager. He's been doing this for decades, okay? Since before this, right? Even before that. So, and yes, inside information is probably being used all the time in the markets, for people in the government, right? And they get special deals to be early investors in things because of their politics. I've got buddies that are investing in certain AI right now and robots that have asked me about investing in those if I want to be, an angel investor or early round in that. So yes, when you have friends and things in those places, you get, first pick. I have friends in the fitness industry that have made clothing brands like Gymshark and Able. And, I hear about things first on that. So of course it's those are my friends, and I'm going to know what they're doing, but it doesn't, but when you're selling something and you're trying to push a stock based on, because of your inside info, that's illegal. You're not supposed to do that. And unfortunately, a lot of people do.
These YouTubers think of themselves as any different. They don't. But these videos do get views. Investing is always going to come with risk, obviously, and advice has to be catered for the individual. But for simplicity's sake, and this is not financial advice, one of the most generic and common pieces of advice that's often given is to invest your money in a broad index fund like the S&P 500.
The advantage of doing this is that index fund investing has outperformed 99% of active investors over a 20-year period.
But that's boring and it doesn't get any views. It's been said 1,000 times before.
It actually does get views. Little, do people know, like it's boring? Yes, but it does get views. Like index funds, top index funds, I probably should have put it the other way. 343,000 views. The top best 5. And this video has been done countless times. That the reason they're doing this top 5, top 6 for 2024, it's because it was done in 2023. Look, I was talking about Joshua Mayo. Look, 1.3 million, how to invest in ETFs. And this information is somewhat boring. You have lots of people doing this. So that's definitely, it's getting views.
By them sometimes. In order to cultivate recurring viewership and get that delicious ad revenue, many abandoned that level-headed image by introducing these riskier plays. They didn't outright tell you which stocks to buy because giving financial advice in the US is...
A lot of times, these guys were telling you what stocks to buy, and you're not supposed to do that. They literally were saying, and a lot of times these guys were buying the stock, potentially buying call options, shorting the stock when that was happening, playing both sides. Some of these guys will sometimes buy calls and puts options in the stock. So if it goes up, they win. If it goes down, they win. Basically, they're like, really, they shouldn't be buying at all. when they're telling people to buy a stock. They're not supposed to do that at all, but they do.
Regulated. It was more like, hey, here's what's in my portfolio. And these viewers tended to follow the world of finance religiously because they needed to know how the market was doing so they didn't lose money. This is how many of these influencers were able to transition into news. Now, this was all fine and dandy until so many of their stock picks began to lose their viewers money.
His entire channel grew off of a scammed cryptocurrency, Shiba Inu coin, and penny stocks.
We are seeing millionaires.
Yeah, this guy, unfortunately, like, he's one of the ones that has given finfluencers, you know, a lot of hate because people are making videos like this on him. And if you talk about a stock, because it gets views, it gets the views, right? And yeah, a lot of this stuff, I never really watched too much of this guy's videos. I remember him talking about like Neo and Tesla and all the EV stuff, electric vehicles. But yeah, these guys were making so much money, obviously, off people buying penny stocks, and who knows what they were doing, really.
Printed. That is how he grew his channel to 600,000 subscribers. Obviously, you should be called out for that.
In a video uploaded in 2023, Carson Gall found that listening to Andre Zick would give you a return of -5%, listening to financial education -53%, stock mo -68%.
That is true. This is over 2 years too. But you got to remember, this was also to give them the benefit of the doubt. This was also when the market had peaked and then was probably going down. But yeah, the thing was, like, financial education, a lot of his stocks did go like bankrupt, literally. Like, and it's like, you guys, like, there was plenty of stocks out there that were cheap, like Meta. Like, if you talked about just Meta or PayPal, like, they were cheap and they have free cash flow. They have cash to literally buy back shares. The stock, it's not going to go bankrupt, right? But they chose bankrupt stocks because these companies, a lot of times, were paying them to promote. And I'm talking lots of money. We're talking, because I've got emails for people promoting for $20,000 to make 5 videos with them. 20,000. And they're like, I've seen channels with less subscribers than me or less views that were making $500,000 to even upwards of 800,000 in a year. Cause I literally calculated how much this was, because I was like looking into it. And it was usually in the mining sector with gold and even uranium stocks, gold stocks, you know, any precious metal stocks. These companies would pay lots of money if you would interview their CEO, and they're still doing this to this day. And these companies have, the YouTube channels have to, on their own websites, say that there's a paid promotion. And I went in and looked at all of them and added them up, and it was astronomical. That's a tiny channel. Imagine a big channel like this. So they don't care if they're wrong. In fact, it gets engagement. When they're wrong, people comment and call them out. But YouTube algorithm, it really doesn't care. It's going to push them and push them and push them to the top. And if they keep making videos daily, multiple videos, the algorithm's going to say, oh, people like this. You know, they're commenting, they're viewing. Even the haters might be watching. So
this video by Cooper Academy that was uploaded last year in July found that Meetkevin's stock fund that he titled My Top 7 Stocks was up barely 2%, while the market at the time was up 32%. Yeah. What's funny, well, maybe not for people that have lost money, is that a lot of these influencers sell a course on buying stocks.
Like I said,
I don't see anything wrong with this per se. Gatekeeping is dumb and anyone should be able to give their opinion. But should you really sell a course if your results are -53%?
You should never sell a course, no. That's why I've never created one. I've made videos on how I invest and put them out there. And a lot of times they don't get views. But you know what? It don't matter. Because at the end of the day, I could still be proud and say I never sold a course, never sold out, and never took money to promote a stock or a company that obviously I wasn't investing in, didn't believe in. And these influencers, they probably don't care, right? But, you know, it's at the end of the day, like, if you really do want to help people, then this content, you can create a course, you can create something, but you should never say, oh, 7 figures, you're going to make 7 figures. You're going to make $1 million if you buy this course. This course is 7 steps to reach $1 million in your portfolio. That's literally like trying to promise someone that they're guaranteed results if they buy your course.
The veil was beginning to lift for a lot of their viewers. Meetkevin's subreddit has turned into a space that seems dedicated to criticizing his every move. This isn't some case of subjective.
Yeah, Meetkevin, you know, when I made the documentary, it was kind of weird that even in his own Discord and stuff, like, people have all turned on him. Now, we've had an unusual bull market in a lot of the things, you know, in a lot of AI and tech. And a lot of these influencers had, you know, sold and basically lost millions of dollars and just put it in basically an index fund, the top 7 basic big stocks. And a lot of those had performed pretty well. So they look and they keep enough people saying, oh, you're right. Jeremy Financial Education can bring up his portfolio, which is mainly there because he was getting, people paying him for courses and other things. So he could just throw it into Meta at the time and, throw it into other stocks that, basically in the past year have done pretty well and returned a pretty good amount. But the entire market had been up at that point. So it's like most people listened to him at the peak and lost a lot of money. And even though it's up, they're still down and lost, life fortunes, right?
Hate where you made a cringy music video and now people hate you. A finance influencer's content has the potential to cause life-altering situations.
Yeah.
People have deleted themselves, if you know what I mean, over stocks. Another tempting high-view topic that these influencers could produce videos on was crypto.
It's stressful. The other problem is a lot of them, if you were following the fintech crash, right? These influencers, they were stressed. Most of them were about to quit. When Meta went down 70% and these guys, their penny stocks, went to zero that they were talking about investing in. When the entire market was down in, late 2022, these guys were almost quitting. Jeremy almost quit. He was, you could tell he was very distraught. And this AI bull run in, 2023 to now, it, really helped them out. It really, really helped them out. And it's just it's a wave. Like things go up and down. The finance sector is a very hard wave to ride. I would suggest if you want to get into this sector, it is the hardest because people that have billions of dollars and the smartest minds in the world are wrong every day. And if you just got to base it on, and that's what a lot of them are doing is now just covering the entire market, not picking a stock. Most of them deleted all those videos, scrubbed the internet as much as they could of the deals that went bad. meetkevin deleted most of his videos or took them down. And yeah, people lost a lot of money. It's sad.
Not a lot of them did this because while it was a popular topic, if they advised their viewer the wrong coin, their integrity would deeply suffer. Considering the fact that not a lot of crypto projects other than Bitcoin and Ethereum survive, it is a high-risk topic to discuss, especially if you're viewed as a level-head.
That's why I never discuss crypto. I traded crypto in the 2017 type run, made a lot of money, trading stocks that were connected to crypto. But, I never jumped into the Bitcoin thing. Talking about it. It was just something that it was pretty much, you can get bot views in a sense. If you talk about that type of stuff, it's almost guaranteed, but the community you're creating is not good people, obviously. It's usually people that, you can tell, go read their comment sections, especially if these type of plays and stocks, Dogecoin goes down, like it's not going to be a good community you're creating because you're telling them to buy at the peak or you're promoting something that literally goes bankrupt. It's not good.
Finance influencer. The most prominent person who decided to take this risk was Andre Zick.
Hi,
He's like a magician. Like why would anyone be listening to him like during this time? Like it's okay if this guy was probably covering the market and he's like, oh, the whole market crashed, but he's like telling you what to buy, showing you his portfolio. This 2,705,000 was not made from investing his little money. You see this big jump? This was not his portfolio. This was when he started making YouTube videos on investing. This was when he started making crypto videos. All that money, right? Look at this. Check this out. Look at this. And Andre was actually one of the lower end ones. He was making $24,000 a month for his paid members. Look at it now. My community, his community went from this to this. It's because there was no community. Like my community, it never got to this, right? I didn't have this explosion. It was a gradual up. And it's steady. It's steady to this day. My community is like, I just don't understand how someone can have millions and millions of views, but it's because it's not authentic. It's not like people saw this, but there are other creators out there. I believe it's Max Maher. This guy, 12,000 paid members from talking about crypto. 12,000. You know how much this guy was making a month from paid members? Look at 5,000. 50,000 on average. And this guy, that's for a $9 patron. This guy was at one point, I think some of his members were $100. Think about meetkevin. They had members for $20,000 per member, right? So if we're saying 5,000 was 50 and he had 12, we're talking 120, 150,000 at the peak. And look at it now. He took it off in January. He basically did not have the memberships viewed anymore in January, so you can't even see how many there are. It's because it's literally looks like their stock graphs of all the stocks and crypto they promoted. It's like if crypto market and a lot of the crypto stuff, they did good stuff. They talked about good stocks. He might be up here. He might be making millions a month. But I mean, come on. These guys were making almost overnight hundreds of thousands of dollars a month. This guy's page now, there's literally, he's still pushing. Give me some privacy. Okay. So he needs some privacy. But if you look at his YouTube, like he's not even promoting his YouTube on here anymore. Like, is it here? Like, let's look. Max Mayer YouTube. And I mean, this is someone, he's almost close to 1 million subscribers, but he got 5. Yeah, you did. Yeah, you messed up, buddy. You messed up. Look, 5,000 views. I wonder what his popular one was. 3.8 million. Okay. How to buy NFTs. Oh, I wonder why. I wonder why this got so many views. And these NFTs, all that he was talking about, are probably worth nothing. And people were paying millions of dollars for these NFTs. Another thing why this guy specifically got a lot of views, he covered stimulus check money. That's how meetkevin got popular during the 2020s. They acted like they knew everything. And I even had people tell me like, oh, you should cover stimulus check stuff. And it's like, why? They're going to give another stimulus check. That's what you got to talk about. It's like, yeah, people kind of can get this information. There's too much. I didn't jump into it. Made him a lot of money, but guess what? His channel, even though he's about to hit 1 million, his credibility, 5,000 views. My channel, literally my last video got more views than that. Yeah, it's a different niche. Not my finance video. It's a different niche, but it got more views than this last video. It's because of that. Authenticity. He cut his hair too. That's probably the real reason. Cut his hair. But I mean, he's about to hit 1 million subscribers, made 1,100 videos, and I bet you he deleted most of these. I bet you he deleted so many. Let's see if there's a dip all time. So it looks like it was around here, probably. So I remember, oh, this is only from 2021. That's right. So this only goes from 2021. So there is a possibility he's got 76 million views. That he's made way more than this though. This is totally wrong. But you can see that like for the whole year, someone with 1 million subscribers, only 4 million views. And like I said, I bet you a lot of this, you could probably see it was also short content. He probably had, like 7,000 views. That's it. It's because like people just don't really trust you anymore, right? And this guy seemed like a cool guy. He was making some business videos. I remember him back in the day popping up. Like I said, I pretty much knew most of the people. He was making this stuff, the business stuff, I think he's has since deleted. Like obviously this was a little bit before this, but this guy came from the finance, the fitness influencer was what he was, I believe, first trying, to do. And I don't think he invested really much in before that. And like, that's just the name of the game when this type of stuff happens. And people are still paying him money. That's the thing. People still pay money to these guys.
Well, I'm still not a crypto channel, so come for the finance and stay for the crypto. It's a phase. Leave me alone.
You could say the jig is up.
It's a phase. A phase loses people money. Okay. But these guys were taking hundreds of thousands of dollars a month pretending to be experts at the time.
Talking about cryptocurrency in general and even explaining what certain coins are, in my opinion, is fine. But if you are viewed as an authoritative educator in finance, you really should not be promoting, even if it's implicitly, altcoins that are highly volatile.
Yeah.
Again, their demographic is likely the irrational beginner who wants to be rich like them. The moral thing.
Yeah, I know people specifically that watched people like this that bought things like Tiger Coin, you know, the Netflix hit show, and lost lots of money. Like, why? I literally said to this particular person, like, why would you buy this thing? I don't know. Some other guy was saying could go up. Could go up. All right, man. That's the viewers, unfortunately, that watch this and get swindled into it. I wish they would have seen some of my content before and talking about, you know, like no one is going to be always right on the market. You're going to be wrong. In fact, Roaring Kitty, most of his stocks that he covered, a lot of them did not do as well as some of the other ones that did thousands of % gains. Some of them did go bankrupt, but he's a deep value investor. So he looks for value in companies that could potentially turn things around. So a lot of times companies don't, management specifically can't turn the ship around. So that happens, but this has nothing to do with that. This is something created out of thin air that people rug pull, right? And he made lots of money and potentially got rug pulled because all his investors, his channel subscribers went and bought it, and he got paid to do it and probably cashed out. And people then, when he cashed out and everyone else cashed out, it sold and went to zero, you know?
Thing to do is not to feed into that irrationality. We'll be missing out on some views, but at least you'll keep your integrity. Andre always had a caveat in his crypto videos along the lines of explaining.
I mean, some like with me, like my early videos, I talked about with specifically in the military, I can make money. It was a lot of, you know, investing, how you can do that when you first get in, to some of the stocks that I was covering at the time, Tesla, how basically Nikola's shorted and I was right about it. I was like, this company's ridiculous. There's nothing like Tesla. And then uranium stocks. Uranium stocks I covered for multiple years and they went up thousands of %. They're still up to this day. And unfortunately, I covered this niche and I peaked out. I pretty much got almost everyone in uranium knew I was, watched my videos, and I made hundreds of videos on uranium and, you know, documentaries on it, and I covered it. And then, you know, it got to the point I was just like, you know what, with this channel, that specific channel, I was like, you know what, I'm never going to sell out. And I don't get the views always, but you know, my time will come, you know, for that channel. And I've stayed true to myself. And there had been stocks that I had, you know, covered and talked about that, like I said, have gone up thousands of %, but you're not always right. And my timing is not always right, but I always had a thesis and I backed up what I said. And I literally would always tell people, it wasn't always about a specific stock. It was usually about a sector, especially with uranium. Now I might have covered a specific event and, you know, covering that event, the uranium price in the world went up after cover, because I had found this event specifically, like the Russian uranium ban. And, you know, the price is now over $100. And those are the things that's real tracking, and having a track record is what it's all about. And yeah, I might not have the views, but I still have my integrity.
He wasn't an expert. He also never explicitly said, buy this crypto and you'll be rich, but he showed just how much he invested into certain altcoins. And if you are that irrational beginner, you're likely
that's a lot of money he lost, right?
Ty Lopez. He's a financial
Look, he's a magician. He's doing a magic trick, right?
As you might have guessed, some of his picks didn't do so well. His notable videos include Cardano, which is uploaded when it was around $1.35. If you sold 3 months later, you could have made a profit because it hit almost $3, but if you waited till today, it's not even $1. Then there was Sheep, which he promoted in October of 2021, right at the peak. It had a small pop recently, but it's never returned to those.
See, and that's the problem. Finance influencers are usually paid. Okay, so when these companies pay them, they're at their peak, right? They have all this extra money. The company, they want to get more investors. They have all this money. And guess what? They literally are paying these people to talk about it, and they talk about it and it goes to the very peak, right? And unfortunately, that's when people usually buy it. And then the rest is history. It's downhill from there. And remember, of course, they're going to want to talk about these things because guess what? The crypto, they get views from it. They get paid forever. People still click on the Bitcoin videos that they talked about with the highest. The algorithm is pushing those Bitcoin videos because if they get 1 million views, that video is paying them in finance, millions and millions of views could be 20, 30, 40, 50 grand in ad revenue by the future life of that one little video that they probably were literally took them hardly any time, because a lot of these finance videos are pretty dry. Like I said, they're sponsored usually a lot of times. So yeah, it is a crazy type thing.
All-time highs again. One of his worst picks, in my opinion, was the crypto OMI. At the time of upload, it was 0.009 cents. Today, it is worth 0.30 and something cents. What's worse is that if you listen to him and bought when he uploaded his video, it never hit 0.009 cents ever again, meaning you only lost money. Hey,
Yeah.
but the views were worth it.
Why would anyone buy anything that's under a cent? Why would you? Like when I was first started investing, because I was in the military, early 2007, a lot of the stocks I was buying were penny stocks because I didn't have money to buy. And back then it cost so much with my broker to buy a stock. In fact, the amount of money I wanted to put into a stock, half of that was already a brokerage fee. And if I wanted to sell the stock quickly, it would pretty much eat into all the profits, almost all of it. So penny stocks were cheap. You could buy hundreds or thousands of shares. And yes, a lot of my penny stocks from 2007, 2010, some of them I just held on to. Some of them were little companies, and sometimes they went up thousands of percent, 5,000% sometimes when the company turned things around, or they were a gold company and struck gold. So yeah, it's funny. Some of my hundreds of dollars I'd put in, or thousands, had turned into a lot more money in the future, but majority of them usually go to zero, especially anything under a penny.
Right? Horses aren't bad. Crypto isn't bad, well, certain ones at least. But of course, you're going to get criticism if you positioned yourself as an authoritative figure in finance and the things you teach or the crypto you've invested in lost yourself money and or your viewers money. Other influencers like Graham Stephan have really tried to avoid this controversy. He hasn't done any videos on which stocks to pick. He doesn't tell you which crypto, if any, he's invested in. If he talks about crypto, it's in a very general sense. His content still caters to the beginners, and he focuses on news. Now, I would go as far to say that Graham Stephan is probably the biggest educational finance content creator there is. If he were to make videos on which stocks to buy or which crypto to invest in, those things would go to the moon. His views would go to the moon. To Graham's credit, he's done well to avoid that and protect his integrity. However, there is an incentive to make up for that loss in potential revenue.
I asked around, the sponsorship deals were absurd. I know a guy, much smaller channel than me, making $500,000 a year, $50K a month.
I just said that. I don't think CoffeeZilla knows the small channels. We're talking, because he's talking smaller than him. We're talking 20 to 30,000 subscribers. And these channels are making sometimes millions of dollars from making videos for these companies, interviews with the CEOs. We're talking penny stocks in the mining sector. There's a big video maybe that CoffeeZilla should go into, but I had done the research, and yes, I was like, you know what? I could make videos. Maybe these companies are good. And you know what? At the end of the day, I was like, you know what? These companies, I wouldn't invest in them. So I was never going to do a video. I would not put my own hard-earned money into these companies. So I would never do it.
To promote FTX US. So I know the bigger guys were getting much more. Some of them probably deals were in the millions.
Graham, among other influencers, have a horrible track record in promoting products that have completely destroyed their viewers financially. We already talked about Yada Bank, but he, along with other influencers, also
I almost feel like that's
FTX.
worse.
Many
I almost
of the
feel like it's worse.
finance YouTubers, including Graham Stephan, Andre Jig, meetkevin, Minority Mindset, and Jeremy from Financial Education, have promoted this exchange in the past.
FTX's failure likened to Enron's scandal or Bernie Madoff's Ponzi scheme.
Similar to Yada, customers could not withdraw their funds, this time from a crypto exchange.
Well,
In short, it was an alleged scam and went bankrupt.
That's the scariest part. So many of these experts who are giving you guys advice totally bought into this Sam character as this genius billionaire, right? The most generous billionaire in the world, who also happened to be paying them handsomely, of course. And I just think it shows how bad the discernment is out there, making videos on
Yeah, it was basically a money laundering operation.
how to invest. It's alarming how many people fell for this guy's ruse. And it's alarming how easy it was to convince them. Like, some of these guys believed in Sam because he drives a beat-up car.
Oh, but wait, there are...
Yeah, like it's because these guys saw videos of Jeff Bezos back in the day driving a Honda, and it got so many people talking, and they're like, now obviously he has a mega yacht, $1 billion yacht almost. But it's like, yeah, people change, and because he was that persona wearing a t-shirt, an old stinky t-shirt, right? And driving this car, maybe people thought, oh, he's legit. He really believes in what he's talking about. But no, it wasn't. And people lost a lot of money.
Other things that influencers have either promoted or put money into that have gone badly. Andre Jick and Jeremy from Financial Education backed Voyager. People like meetkevin and Andre Jick again put money into BlockFi. Sponsorships also lead to a conflict of interest. FTX, BlockFi, Yada. These companies are smart. Let me clarify, smart when it comes to marketing. They know humans have a cognitive bias called anchoring. It's when humans rely heavily on the first piece of information they receive when making decisions. Here, you have someone who has built a brand that illustrates themselves as a responsible financial educator. This first piece of...
The other thing is, I think a lot of people that watch these finfluencers know that they're not always, going to be right on these things. I don't think every one of their subscribers that at least continue watching is going out and doing exactly what they say. Sometimes they're doing it for entertainment. So we do got to remember that too.
Information anchors a viewer's perception of them as a whole. With 2 out of the 3 of those companies involving crypto, it's going to be extremely risky to invest in them. The perception of risk is mitigated, though, because it is being endorsed by the educational finfluencer.
It's not mitigated unless you do something like Roaring Kitty. He would mitigate the risk. Okay, he was a real, analyst and would go deep into the stock's balance sheet and look at the free cash flow, look at the debt, literally go into, and it's something I do when I check out a stock, go into the bonds and look who owns the debt and see how the bonds are trading. Those finfluencers, none of them do that. None of them. Because they only care about what video gets the most views and what's trending at the time and what people are going to click on. And I mean, in some ways you can't blame them. Like, they just want views. They want to be entertaining. But in the end of the day, if anyone is buying on face value and loses money, yeah, it's very, very, very sad that this happens.
One of the most common arguments finance influencers use, not necessarily to justify bad crypto/stock picks or bad sponsorships,
not financial
but more to
advice?
dismiss their fault, is to say that they got scammed too. And I think this is true.
Too.
Yeah, these influencers didn't have insider information that the public didn't have. But I can see how this argument would frustrate a lot of people. On one hand, the finance influencer positions themselves as an authoritative figure in the space. They call themselves educators. They sell courses. They make informative videos. They're an expert. They supposedly know.
So anyone who sells a course and all that, they are giving financial advice because it's financial advice. When you give a course and you're saying guide to make 7 figures a year, how to make in the markets, how to buy a stock and make 7 figures. It's like you're giving financial advice.
Lot and want to share that knowledge with you. But then when they make a mistake, all of a sudden it's, oh, I don't have experience in this. I'm just like you. You can't be both. This is why so many people call them greedy. They're an expert when it's convenient, when they want views or when they want to sell their courses. But they're...
Yeah, and when the stock goes up, they show their portfolios, and all that money that they put in there was from ad revenue and courses and everything else. And, they slept good at night because they had residual income coming in. That's why, and a lot of times that's why a lot of them were able to hold a Tesla. They were able to hold, a stock that they got really, really lucky that got into, parabolic mode. It's because they already, they put a little bit amount of money in them, to them, a little bit amount of money, and it ends up going into $1 million because they just keep holding it because it's the only thing they have that they got lucky on. And in a bull market, everyone is a genius, right? It's only when the tide goes out that you can see who is really naked the entire time. And a lot of these finfluencers, the tide has gone out, and it's gone out and it has not came back. It's been out and they're flapping around saying, not financial advice, guys.
For an amateur, just like me and you, when their stock/crypto picks don't work out. Some influencers like Nate O'Brien have realized they've exhausted a lot of topics in basic finance.
I had said everything that I needed to say. I've made all the videos that I wanted to make and the thoughts that I wanted to share. I feel like 95% of those I've already done.
It's great.
Yeah, and that's another thing. Nate and I, we're very a lot alike. Like, I was not just making videos at the point of when I was just doing it for getting views and, because everyone else was talking about the specific stock. I only wanted to talk about stocks and things that I wanted to talk about. Nate did the same thing. He was very humble about it. And I think that he also saw that he kind of peaked, right? There's only so much you can do in that. I think he could be a great YouTuber and pivot into other things because his mindset, his business mindset and everything, it's smart. But eventually your audience will grow up or move on, and you got to pivot and you got to keep going. Lord of the Rings, you watch Lord of the Rings. Are you going to watch it the next day, the next day, the next day? No, because you've watched it. Now, maybe a year from now during Christmas time, you might watch Harry Potter, Lord of the Rings. But when you watch it, you pay that ticket, you do move on. You got to create, if there's a Lord of the Rings, something that's actual, like, a new book or something that's like it, maybe people are going to give that a try. And, if it uses the same lore, the same world, you put that into it, I think he could still be good and still get views, but people move on.
Myself, I do understand that they're trying to keep their business afloat, and a portion of that is through views.
I don't think Graham is the worst guy ever, but I think the problem with these finance channels is they do a lot of fear mongering, and a lot of what they're doing is strictly just like, it's like entertainment and bad advice as opposed to.
Yeah, it is. I mean, it is fear mongering because look at the new videos. These videos, none of it was fear mongering, right? In the past, but their latest videos, it's always, look at this, sell, 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 sell. He's telling people to sell, dude, like crash of your life. And by the way, the stock market's been going up when this FK, wonder what he means. FK sold. It is fear mongering. Sold. And like you look at that's Jeremy. You look at meetkevin, same thing. His latest videos, it's bad. Oops, fire in the background. Holy, it's about to break. And the market, over these months and months, it has gone up and stocks have been recovering. In the past few months, PayPal stock went from 50 to now $81. Something of value that I've been covering. That it's still at 2017 prices. And these guys were saying to buy PayPal at the peak in 2021. And I didn't really care about that stock in 2021. Now, when it was $50 back at 2017 prices, just a few months ago, I was like, you know what, this is something for me. I think it's good. This is where I see value, and I post that, and that's why it got a lot of smart people talking about it, and they agreed with me and said, my research was good because I provided it. I wasn't selling a course. I wasn't telling people to buy PayPal, and PayPal's massive already. Like they put trillions and trillions of dollars per year in payment volume. I'm not going to move the stock myself. These guys, they might have a little more influence in moving the stock as influencers.
Like actual genuine good advice that'll actually help people.
That begs the question, what's the line between running your YouTube business but also staying educational and ethical?
If you pay close attention, you will notice that more qualified creators like Richard at the Plain Bagel, who is an investment analyst and has a CFA, and Ben.
I mean, just because you're an investment analyst or have a CFA does not make you smart in knowing how to pick stocks, because most analysts are the worst stock pickers. These guys are doing this to make money. If you're talking about money, let's just be honest. They're sponsored too. They are also here to make money. And it's fine to want to make money. You're putting in time. Time is money. If my viewer is a plumber, he knows that I'm not going to expect him to come to my house, do all this work on my new plumbing for a new building or something, and expect to not get paid for it. It's time, right? It's effort. People put effort and time into it. A lot of influencers, they don't always put time and effort into their videos, and they're paid to talk about something. So yeah, that's not authentic. But just because these people, I will say, yeah, they might have not said to, buy a specific stock. They might not have had issues with FTX and things, but they're still making money and they're still in the same sector. And really, it doesn't, in my opinion, doesn't mean that they're smarter just because they are a financial analyst. Keith Gill was very smart, and that's someone who literally said financial analysts are usually not very smart. They are not right. You can check their track record. They're not usually right. Okay. And if you talk about the broad market, of course, you never take a stance on something. You're not gonna be right or wrong. You're just gonna be talking about what people are talking about, with the entire market. How to make money, with an index fund. Yeah, it's basic. It gets views, but it's still really no different. As long, if they're getting sponsorship deals, even if it's something that's, legit, JP Morgan, something big that's not going to go bankrupt, they're still doing the same thing in a sense that other people are doing. Like these influencers that they're talking about that are promoting something particular. So
Felix, who's a portfolio manager, avoid making financial recommendations because they know they can't do it to an audience of that size without doing more harm than good. And I think
and they're also smart. They're like, you know what? Like if I make all these, recommendations on all these different stocks, 9 out of 10 times, like the recommendations are going to be wrong, because if they could do, if that guy, I don't know who the other guy was, fund manager, if he was a good fund manager, he wouldn't be making YouTube videos. Okay. Keith is not making YouTube videos because he made $800 million from 53,000 in a position. He churned that. He doesn't need to make YouTube videos. He went live because his thesis played out. He even joked about it. It played out. And they made movies about the guy, right? If you're making money in the market, you're not making. That's one reason I've not made necessarily videos on certain things over the past year or so on that channel. I love making this content. I love talking with my new audience here. I love covering it and giving my take because it's a lot of fun. I love making videos. I've been making videos on YouTube since 2006. But yeah, it doesn't mean that they're necessarily better.
Wild speculative advice is why their audience is significantly smaller than these more exciting characters.
Regardless of the answer to this question.
And I wouldn't say those guys are smaller because they're getting lots of views. I just showed you hundreds of thousands. They're getting more views than them now. And it's the authenticity, right?
Criticism finance influencers faced is well deserved.
Jeremy from Financial Education is a fraudster. He's a scammer. He's an idiot. He's a moron.
These vocal critics.
Those guys are also kind of like selling stuff too that are talking bad. And it's kind of funny. The finfluencers that are like talking bad about each other, they're usually doing the same thing. In YouTube in general, if anyone has ever made a video about something, almost guaranteed they eventually do it because they join the game, they join the party. That's what's paying, unfortunately. But I would rather make videos like this and do my commentary and give deep analysis on things and really create a community and talk about it. And I'm not always right. And it's just my opinion,
Aren't mere internet trolls. They were once diehard supporters, many of which have faced significant losses. All right, guys. I mean, putting aside the bad.
Yeah, I mean, this thing, like your community, yeah, they're not going to like you if you make them lose money, but your community should know in the beginning, like, don't invest in this. And that's what I've done from the beginning. Like, people in my community might say, hey, what do you think about this? It's just my opinion. And I've been wrong, and I've been right as well. I've been wrong and I've been right about things. But what's cool about, like, specifically my community is people come from different backgrounds and they've made their own decisions. And a lot of people, when I was right, they might not have taken, into that perspective and not bought into it or done what I'd done. And they're like, man, I wish I would have. But it's like, no, you should follow what you want to do. And there's times when I didn't do something, but someone was like, hey, what about this stock? I'm like, it's not for me. And the stock goes up 500%. And, those things happen. But that's what's cool about a community. You don't have to believe and do exactly what everyone else is doing. And you should never do that in finance for sure. But this was a good video. I'll have the link in the description below. But I love doing these. I love giving my perspective. I've been doing YouTube, like I said, since 2006. Please subscribe to the channel if you like this video. I'm going to keep this real with y'all. Pretty much no cuts. This is just me with y'all talking about a big subject on YouTube. The biggest niche in the entire YouTube that pays the most, finance YouTube. I've been a part of it. It's been going downhill for years. Everything on YouTube seems to be all about sponsored deals and ads and all these. And I just want to keep it real. That's why I've done this. So if you guys enjoyed it, hit the like below. Check out the channel. Donna's, the original video I've linked below. And thank you guys for watching. Thanks for sticking around the entire video. And hey, let's get this channel to 1 million subscribers. Those other fintech people could do it. We can do this with our content. And if I get 1 million subscribers on this channel will have the world record for the oldest YouTube channel and slowest to reach 1 million. It's kind of funny because my last name is Quick. So we'll be Captain Slows, right? All right, guys. Thanks for watching. And until next time.